Paying tax when we've done a Roth conversion in retirement. Hi, this is financial planner Sean Mullaney. Let's discuss. So previously on the channel, I gave a video about, hey, maybe we're both 66 years old, we're married, we've got some great runway to do these Roth conversions. I did a whole video about, a $60,000 Roth conversion in the year 2024 might only trigger $3,100 of federal income tax. That is a 5.7% effective rate on that Roth conversion. Great planning opportunity. But then people say, well, wait a minute, how do I pay the income tax on that? And I've got two thoughts I wanted to share. One of them is about the current year. So in the current year, right, we do our planning. It's maybe the fourth quarter. Maybe we haven't made any estimated tax payments. We don't have any 1099-R withholding. We don't have any W-2 withholding. Oh no, what to do, right? Well, the first thing to do is figure out how much tax do we think we're going to owe. We have to estimate, and I will say we should generally round up, not down. And if we find ourselves, hey, it's the fourth quarter, we haven't paid any tax, we're triggering a $3,100 tax liability that we think we're doing, I would recommend at least considering two courses of action, and this probably should be done in conjunction with a tax return preparer. I'm giving you academic knowledge, not individualized advice, but there are two things I would strongly consider. One is taking a stroll to directpay.irs.gov, and I have that website up here. I'll drop it in the links below. And so you can look at this. It's a way to make an estimated tax payment. It's actually very user-friendly, and I would get that whole thing paid in, generally speaking, right? And you say, well, wait a minute, though. Doesn't that still leave me vulnerable to a potential underpayment penalty? Well, I'm going to say two things about that. One, it's only $3,100 of tax. Let's not lose sleep here. If we can get that fourth quarter estimated tax payment in there, it's better than nothing. The other thing we could do is what they call annualization. So there's an IRS form 2210, and it basically says, hey, IRS, I had all this income this year, but it was mostly in the fourth quarter, right? If you do a $60,000 Roth conversion, most of your income is probably going to be in the fourth quarter. A lot of the dividends are going to be in the fourth quarter. So I've got the 2023 version of this. Basically, if you ever find yourself in a situation where, hey, I've got some taxes owed to the IRS, maybe I only paid them in the fourth quarter. Well, you could, use this form and say, well, wait a minute, IRS, most of my income was in this last quarter. And so, hey, this penalty ought to be fully abated or largely abated. So that's an available tactic. But going forward, I think a lot of retirees have something much better than what I just described. And that is just figure out the estimated annual payment or estimated quarterly payment next year. So for 2025, this person's going to be in great shape. Why do I say that? Well, they have what they call a safe harbor. Their adjusted gross income in 2024 is 122 by my estimate. And the IRS says, this is in the tax law. I'll link to this publication 505. There's some good news. All you got to do is get 100%, if you're really high income, 110% of last year's taxes paid in for this year. And then you're done. Even if you win the lottery. Now, yes, you're going to have to cut a check next April, but you're protected from the underpayment penalty. So what do I mean by that, right? So let's say this person did in 2024, this married couple does this $60,000 Roth conversion. They trigger this $3,100 of tax in 2024. What do they have to do for estimated payments in 2025? All they got to do is go to this direct pay website 4 times, right? Before April 15, 2025, June 15, 2025, September 15, 2025, and January 15, 2026. And they make one of these estimated payments. And it's not even that much. It's just 100% of the prior year tax liability. That's not that much at all. It's $775. You pay that in, and now you're covered, right? You win the lottery in December of 2025, not a problem from an estimated tax payment perspective. You're paid in, and now, yes, in April you're going to have to write a huge check, but there's no penalty. You meet the 100% safe harbor. And if your income, your AGI in 2024 was 150 or above, just make this 110%. And right, it doesn't hurt to round up a little bit. The point here is we're trying to avoid these estimated tax payment penalties for underpaying our taxes, and there's this great safe harbor. Once we know what last year's tax liability was, we just make sure we get that in quarterly estimated tax payments through this directpay.gov website, and we're going to be in good shape. Yes, we may have to still cut a check in April when we file our tax return, but we generally speaking should not owe an estimated tax penalty. Hope you enjoyed this video. If you did, please mash that like button and subscribe to my channel. I'll see you next time.